Did you know that when a bank or a institution reports you to the credit reporting agency for being 30 days behind, you're actually almost 60 days behind? Yes, that's true. See, when you get a delinquency on your credit report, like your first delinquency on your credit report, you're 30 days behind. Banks generally do not charge you, I'm sorry, they do not report it as soon as you miss that very first payment. They report you after you have reached to the 59th day past the due date. That's when you're considered 30 days behind, mainly with credit card companies. Hi, my name is Tanya. Welcome back to Essential Facts. Here today, we are going to talk about when you are reported to a credit reporting agency, what delinquencies are, and how long they stay on the credit report. Again, press subscribe, press like. I love doing the content for you all. I love letting you all know what I know because I feel like the consumer should be informed and they should know what the banks know. So, let me go ahead and dive right into it. So, now, when you're past due, banks do not report you like right away for credit cards. Let's start with credit cards first. They do not report you right away. They give you the ability 59 days before it hits that 60th day past that initial due date before they report you to the credit reporting agencies, which are TransUnion, Experian, and Equifax. So you may not be reported right away, but they will charge you a late fee. So whatever they establish for their late fee, you will have that late fee. And it can eventually, if you continue to be late, it can increase your interest rate. So a lot of people don't get that when that delinquency is on your credit report, it stays on for 7 years. When you have that late payment, it stays on for 7 years. Then when you get that 60 days behind, the 30 day plus the 60 day, each one of those are staying on 7 years from the date they were put on. And it goes so on and so on. We go from 30 days behind, 60 to 90 to 120 days behind to 180 days behind. Once you reach 180 days behind, you're at the point of where they are going to charge off your debt as an uncollectible debt. So it's considered a charge off. It's a negative write off for you, but it will be charged off, and that's how it normally reports on the credit report that it was charged off. Now, there's not any way you can really avoid that from happening. Let's go back to the 30 days for once it hits that delinquency status. The only way you can avoid it is to make the payment on time. Now, you can pull it, let's say it's 60 days behind. You can obviously pull it out of 60 days behind if you don't have the full 2 months payments by making at least a 1 month payment because now it went from 60 days behind to 30 days behind. But it's going to show again, you have another mark at 30 days behind. So if you look at your credit report, and might I add that you are able to get a copy of your credit reports, a free copy every year. You get one free copy every year because you do have the right to see what's going on with your credit report. If you dispute something too, you still can get a copy of the credit report to make sure that everything is off of the credit report that you disputed. But again, that's a different story. So when you get these delinquencies on your credit report, it hurts you bad. It really does. Because let's face it, if you do not have enough money coming in on your paycheck, but if your credit is good, you can still do things to make ends meet. Now, you may be charging more on your credit card, but let's be honest here. As long as you're making your on time payments, there's nothing negative being reported on the credit report. You can make your minimum payments, which I mean, that's what you can make, then that's what you can make. Let's be honest here. It's better than it falling past due. So, I always tell people, you know what, pay what you can, on the credit report. You want to make at least the minimum payment on the credit report to keep it from going past due where it's reported on the credit report. Now, with a mortgage, mortgages are a little different. So, a first mortgage, you actually have 15 days to pay it before it's considered late. So, mortgages, like a first mortgage payment is going to always be due on the first of the month. I just haven't seen where, and I'm not saying there aren't any out there. I'm just saying I haven't seen where there's been a first mortgage payment due a different time of the month. Now, you can request it if that's a better time for you. Some banks will allow you to request a better date for you, but you really don't even need to do it because, like I said, you have from the 1st through the 15th for that payment to post on the account, the full payment to post on the account before it's considered late. And let's face it, we definitely don't want a late mortgage payment on the credit report. I mean, we don't want any late payments, but you definitely do not want a late mortgage payment on the credit report. And it's one of those trades on the credit report that bears a lot of weight. It tells other creditors that they're falling past due on their mortgage. Wow, I just don't know. Or if they decide to, loan you the money or the credit, you're going to have a very high interest rate. But you have to certain trades on a credit report, you just want to make sure you keep those up to date no matter what. You try your darndest to keep those up to date. But you do have 15 days to make the mortgage payment before they give you that late fee. Now, that late fee on the credit report is not a set fee like you will have with a credit card. The late fee is usually based off a percentage of the balance, or I'm sorry, the payment. So, I always tell people, you're getting paid somewhere in between. I mean, unless you just lost your job, and that's a different story. But you're getting paid somewhere in between the 1st and the 15th of the month. So make sure that home payment is paid, and make sure those credit card payments are paid. If you have one credit card you're using more than the other, you want to make sure that one is always paid because look, you don't want it yanked from you. You don't want them to yank it from you. I mean, sometimes it might be yanked if they decide to do an analysis on you, a financial analysis on you, and just check to see where your debt is. You know, banks can do that too, and reduce it, but or close it out, honestly. But the other thing is for a mortgage, you're not going to necessarily be reporting to the credit reporting agency once you hit that 16th day. Again, you're going to receive that late fee, but they're not going to report you right away to the credit reporting agency. I just cannot stress enough again. Make sure you make a mortgage payment on time because it bears a lot of weight on the credit report like credit cards. Now, car loans, you're late with them, it's going to be the same thing. Basically, if you're late with that delinquency on your credit report, car loans, it just, like I said, it depends on the institution. It depends on the institution. I can't speak in matter of facts with certain items, certain things, because like I said, it just depends on the institution, how they, how, what it is. And if it's there in the writing and that's what you took, then that's what you have. The other thing is that with the delinquency on the credit report, you want to make sure that it doesn't reach that charge off status. And like I said, I know sometimes people lose their jobs, people get sick, they have medical bills, or their kid gets sick. I mean, let's face it, there's life happens, and your credit report can go down for a year, 6 months, 8 months, or whatever, until things get back on track. You will have some banks, and it's not that many. Now, where I used to work many years ago with MBNA, that if you had a spotless credit history, and then now it's showing like 6 months of delinquency on your credit report that was never there, we just never just closed down the account or did not extend a person's um, credit because of that alone. We actually had credit analysts review it. We actually reviewed it. We called the customer, and some of you all might remember who had an MBNA credit card back then. If you got in a tight spot, we will call you and say, "Hey, what happened? You have been a spotless payer all this time, and I noticed that there has been a like 6 months or 9 months or 10 months of delinquency on your credit report. What happened?" Oh, I was in a hospital. Oh, my husband was in a hospital. My wife, my kid. This happened. I lost my job. Hey, is everything better now? You take a financial analysis of them, and it makes sense. I always felt, and I always love that lending philosophy that MBNA America had, that you call the customer because you don't, I mean, life happens. I just don't feel like people should be penalized because life happened. Now, if you're just a person who do not make your payments, or you make spotty payments all the time, and you're constantly delinquent here, there, and everywhere on your credit report, that's a different story. That's completely different. But a person who has spotless payments, and all of a sudden, oh my goodness, something happened here. Let's find out what happened. Let's see if it makes sense to extend them credit, or whatever the situation is. But I always love that about MBNA America. And I'm going to tell you too that most banks are not going to do that. You get in that bind, they don't care, because 9 times out of 10, that when you put that application in, and it is as soon as you hit that submit, it just, I mean, the computer just says yes or no. Oh, does the score meet where it's at? It's not looking at your payment history per se, like, oh, on time payments this year, on time payments this year, oh, this year right here, delinquency. It's not looking at that. It's looking at, all it's reading is what your score is, and how much delinquency that it caught on the credit report they pulled. Or if there's a lot of debt on the credit report for whatever reason. But yeah, just know that the average bank is not going to call you and ask you. I mean, some of these banks will, if they are really trying to help the consumer with a loan, or but with credit cards, most of the time they're not going to do it, because they just don't care. They just look at your, I mean, you're a risk, and that's just how they look at it. They don't look at it like, oh, like life happened, and things can go left sometimes. So, um, but if you're in that situation, just do your best to make your payments on time and get yourself back on track. And the delinquencies, unfortunately, they stay on for 7 years. Now, I know you have some of these people out here saying, again, that they got their delinquency removed just like that. Again, it's all moot to have credit reporting agencies if you can just fall past due. and have all this delinquency for it to just to be removed just like that. Now, delinquency stays on the credit report for late payments for 7 years. If the account is written off as an uncollectible debt or charged off, same difference, written off as uncollectible debt or charged off, it stays on for 7 years. Now, I tell people, and it's up to you if you want to do it or not, the duration for the delinquency. It's interesting how it works because you're thinking that, okay, it charged off here January, whatever day, January 25th or whatever day it is, 2025. So you're thinking that January 5th of 2032 is, in a way, yes, that is true. If you do not do anything else with that charge off. And what I mean by that is that's the date of last activity on the account. It was written off. So now the clock starts ticking for the 7 years of that being on your credit report. Now, if you decided that it's written off and you're going to say, oh, I'm going to make a payment on it. Let's just say it hasn't been sold to a collection agency just yet. It's a month later, I'm going to make a payment on it. Or, let's just say it's, I don't know, it could be 2 months before it gets to a collection agency. Who knows? It's just up to the bank and when the collection agency decides to call. But you made a payment 2 months later because, you felt in your, I'm going to call the bank up and work out something with them, Now you start the clock all over again. You made a payment, in March of 2025. Now you start the clock all over again from that 7-year date. So again, the 7-year status stays on there from your last activity date. So sometimes it's just best if you know you're not going to be able to pay it, just leave it as is. If you settle it with the bank, I mean, settlements are tricky because, and I'll go into settlements more because there's a lot more to settlements. But just know that settlement stays on for 7 years too. That stays on for 7 years. If it goes to a collection agency, depending on which state you're in, a collection agency can have 10 years to collect on that debt. They can have 15 years to collect on that debt. It just depends on what state you're in. It stinks. I mean, it stinks. It's 10 years later, and if you're in a state where they can collect for 15 years, 10 years later, you're like, okay, I'm getting something from the collection agency. Like, what's going on? You're like, what's going on here? So, just be careful. Try to make your payments on time. Try not to be a sloppy payer with your creditors. Some people can't make their payments; they're just sloppy payers, and that's not cool either. Make the payments on time if you have the money and the ability to do it. Make the payments on time, and just remember that the delinquencies they do stay on for 7 years of the last activity date. Charge-offs, they stay on for 7 years. Settlements, bankruptcies are longer. Obviously, they're 10 years. Um, we'll go into bankruptcy. It's a little bit more with bankruptcies too, because sometimes you can still reestablish yourself. You can still reestablish yourself, and sometimes you can still reestablish yourself with banks with bankruptcy on the credit report. You just have to do a little bit more work, but you can reestablish yourself. You can reestablish yourself with a settlement to a degree. Banks would like to see that word settlement on the credit reports because it says that you borrow money and they're not going to get their money back, the full amount back. So, but it's odd because a bankruptcy can afford you more on a credit report to rebuild yourself than a settlement can. It's nuts. I know it's crazy, but the best thing to do is always get a copy of your credit report each year to know what's going on with it from all three other credit reporting agencies. Make your payments on time. Avoid the delinquencies like the plague because good credit, it does afford you so much more, even if you're in a tight bind. And I'm not saying, live off credit cards, but unfortunately, some people have to with their situation. And I will not ever judge anybody over anything like that because, look, there were times where, back in the day, I had to do the same thing. But one thing I always made sure, I always kept my credit good. I always kept the credit straight because it just affords you so much more than you can imagine. But that's how, guys. Again, this is essential facts. We talk about things about banking and credit cards and things of that sort, collections, mortgages, or whatever you want to talk about. I mean, sometimes from time to time, I might get off on a tangent about something else that's not even related to what the theme of the channel is, but that's okay. We're gonna have fun with this. Press like, press subscribe, keep it coming, and you know what? I'll keep it coming. Other than that, I want you guys to have a great rest of your day.